Hi all, this is Ashish Kyal here, and welcome to Elliott Wave News channel by Wave Strategy Advisors. Here we meet again on Friday at 4 as discussed in the prior week. This time it's an interesting topic. The heading itself or the subject line itself is REB headed for a crash, and it's not easy to be against the crowd when especially when Nifty has been headed higher and showed a increase of somewhere around 80 points in the previous day. But there are cluster of evidences which suggest that we are now at a very important juncture, not seen probably for many weeks now. And in the previous update, if you remember, we discussed about why markets should be moving towards 8250, 8280 levels on the upside. And we are here now again on a Friday where Nifty touched 8,300 levels and probably showing some reversal signs from there. So one very important aspect about today's is going to be I'm going to discuss about time cycles, which is a very important concept that we combine along with Neo Wave, which is an advanced Elliott wave, in order to understand what is the maturity of the trend. And the beauty of it is that time cycles is an independent study to that of the Neo Wave pattern, because as per Neo Wave pattern, if we have a specific pattern under consideration and we expect that scenario to play out, but if time cycles also confirm a similar outcome that converges both the studies and gives a synchronous outlook, which is very objective. So for now, our short term, we have seen and mentioned in our daily research report, the financial wave short term update, that the move from which happened from the lows of 7,000 from the lows of 7,900, around 7,900, so far has been in a diametric pattern, and market has behaved exactly as per that pattern. We predicted it way early in the trend when Nifty was somewhere around 7,950 or 8,000 level, and we clearly mentioned in our reports that it's headed towards 8,250 or 8,300 levels. Even in our so prices have moved and behaved exactly as per that, and we are probably in the final stages of completing that pattern. The detailed wave counts can be found in the daily research report. And what is also very important to note is that the time cycle of that we have been following for many years, not many months. We have been following a specific time cycle for many years, and that time cycle has helped us to capture very important lows along with important tops at majority of the time. And when we have a cluster of evidences together which suggests the same outcome, then we come out very strong and bold that this is the scenario which we think should play out, irrespective of what the mainstream experts are saying or irrespective of what the euphoria is across the street. Okay, so this time let me now also point one very important concept which is known as seasonality. So I was doing some very in-depth research for our upcoming monthly research report, which will be probably published today evening. And we have shown a concept of seasonality where we have highlighted that in January post 2008, including 2008 January, there was a major top which was formed. January 2011 formed another major top. Jan 2013 formed another major top. Jan 2015 was also very close to a major top which was formed again in March 2015. So that was very close to that level. And all of these major top were the scenario of major tops which resulted into a downtrend at least for a few months, not weeks. And also one important observation is that the top made in January 2009 and made in 2010 had been had resulted into few weeks of down move, but nevertheless it was resulting into few weeks of down move. So there was only one exception, which was January 2012, which resulted into an up move, because the trend prior to the January 2012 for the entire year was already negative. So that was only exception in past 8 years when January has resulted into probably a temporary down move for a few weeks, or it has resulted into a major down move for a few months. So that is the concept of seasonality, which we have which we are going to show in very in-depth and detail in our upcoming research report, monthly research report that will be published today. And that seasonality is another reason why I have labeled today's headline as "Are we headed for a crash?" So we have a January seasonality, which is indicating it's not been a very optimistic month. Next is if you look at the trend lines and the channel concept, which we follow very closely, let me show you on my screen of how this trend line and channel looks like. So let me share across my screen, and that will show a very important concept of trend lines and channels. Over here, if you are seeing the chart, you can see that the highs which are connected, prices are now very close to that similar highs. So will it break? Yes, there is a possibility it can break, but looking at the overall struggle and the pattern internal counts, I think there is a that the higher probability is that it might reverse. And also we can clearly see that the high made was very close to in today's session was very close to this trend line, and then the reversal happened. So that's very important. The another aspect of this pattern which is ongoing is an expansion pattern. So if you look at this chart, it's an expanding pattern. We have not shown the internal Elliott wave counts over here since it's meant for subscribers, but it's an expanding pattern which we are seeing here. And what you can also see is an important time cycle. So we are in a sell mode as per this time cycle, the red and the blue, both one, which is a display cycle. So both the cycles we can clearly see we are in the sell mode. So what we have seen is the low which was formed on the day of demonetization, or the next day of demonetization, which was probably on 9th of November, was an important low. And post that, we are again going to form an important low, which is going to be only by end of January. So if an important low has to be formed, there is a high probability we should top out in middle of the trend. So we are now probably at a very important juncture where the time cycles are putting pressure on the prices. So time cycles are putting pressure on the prices. At the same time, the red trend line, which you are seeing here, has been the one which has halted all the up moves since the down move started in 2016. So these prices are very close to that. Thirdly, the internal counts of the diametric pattern suggests that we are in a very mature stage. So that is the third point. The fourth point, we discussed about seasonality, and the next is probably, if you look at the overall bigger term pattern, it is also in sync with what the time cycles are suggesting. So all in all, everything is now in sync, but what one thing is awaited is still a negative price confirmation. We do not have a negative price confirmation so far. It's almost 9 days when Nifty has been closing about, has been protecting the lows of prior bar. So it has been consecutive 9 such days, which is not seen before. So we do not have a negative price confirmation, but at the same time, most, in fact, all the technical indicators are now aligned together and have been pointing in the same direction. But does it mean that you go short right now? No, I would refrain from doing it because there is no negative price. At the same time, you need to understand what is the pattern, the short-term pattern which is forming, because only once you know the short-term pattern, you can time the execution of the trade becomes very important, because there is a possibility there we are seeing some distribution happens, and in case of some distributions, we can even see a move toward 8350 or probably 8400. But eventually, I think the tide should turn, and it is probably wiser to play on the downside as and when the support breaks, rather than creating fresh long positions at the current levels. So that's a very important thing. So are we headed for a crash? The probability has drastically increased. Yes, we might be headed for a crash, and very soon. So stay alert, stay tuned, because if once the support level breaks, we are going to go mention it all over the place in our research report that the important support is broken and prices are headed much lower. But and also one important aspect is that the intermarket analysis, or probably intersector analysis, if you do, Nifty has moved all the way from 7,900 to probably 8,300. But look at Bank Nifty; it has been a major laggard, and it's a leading index. A leading index, which is a major laggard, is not a very promising sign. So we are keeping a close tab on how the Bank Nifty from here on, how Nifty behaves, whether it protects or breaks the support level, and the daily bar technique again is very important. The important red trend line resistance is placed here. The time cycles are in sync with the new chart pattern. So there have been a lot of things that we have been talking about, and all of these have been mentioned in the upcoming monthly research report. So stay tuned. I'll also share across one very important aspect which we showed in the previous update of the monthly research, which was published on 6th of December. We clearly mentioned that about how prices are the probable path that the markets can follow. And let me share across what was shown in that report and what has happened. So if you can see the screen here, we have clearly shown this is the path. This was in December. We showed that there is a possibility of down move. Nifty bottomed out around 7900 levels. We also mentioned we can see a move towards the level of 8300. Nifty is now at 8300. So are we headed for a crash? Possible, but wait for the crucial support levels to break to get some confirmation, and this will be mentioned in our short-term research report as well. Also, before winding out for today's session, I would also like to announce that we are conducting a training on 18th and 19th. I think it's 18th and 19th of March, where we are going to explain about yeah, important neo wave concepts along with combined with Elliott wave and time cycles, because all the studies that I have talked about right now are all important for me, and there is more to it. So in order to time it to the point, it's important to look at the short term charts as well. So we will be covering all of these aspects, all of these studies together in the training session, which is going to be in 18th 19th March in Mumbai. I would in case you require any more details, you can please get in touch with my colleague on 9920422202, or dropping your contact details on my mail ID, which is Ashish Kyal at wavesstrategy.com, and I'll ensure that you are responded back with the details of the training. And we also have an early bird offer. If you register before, you also get access to the free research report, and you can yourself see why we are at a very important juncture and what is going to result markets into probably a crash. And trust me, the news will come later, but the forecasting ability that the technique carries is worth paying heed when we are at such an important reversal areas. So stay tuned. We will connect again next week, as and when the market pattern follows. We will highlight it here, but I'll not be able to confirm or explain each and every level that we are looking closely, because those are mentioned in our daily as well as the monthly research report. So stay tuned. And in case of any queries or anything else, you can always drop me a mail or visit wavestrategy.com and then drop your email IDs there. Thank you very much, and connect again next week, same time.